Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Andy Schectman. He's the founder and chairman of Miles Franklin, one of the biggest precious metals dealer in the U.S. Hi, Andy. Nice speaking with you again. Uh, I think you were on about 6 weeks or so ago.
Mario, good to see you, buddy. Yeah, it's crazy. One of the interesting phenomenons that has kind of permeated my psyche is how time is a blur since 2020. How 6 weeks feels like the blink of an eye, how 2 years feels like a blink of an eye, and how things just seem to be escalating in intensity and in veracity and in just in speed. Everything just seems to be spinning a little bit faster nowadays. So it's good to be here. It seems like I was here with you yesterday, but I'm always happy to come back and appreciate the invite. It's good to be here.
You're welcome. And yes, I feel like that as well. Like 2020, they just flew by, even though we were under lockdown here in the UK for 240 days. And it just seems like we keep getting crises after crises, and they seem to get worse and worse. Which is not surprising to me because I've done a lot of study of monetary and economic history, and I knew that one day this fiat currency system would unravel, and it feels to me like that. And we were speaking before we started about how I said how it feels like 2008 because I was very much following markets in 2008. I worked in the city of London. I worked in the bond markets, but I had started buying gold since 2002. And I remember March 2008, gold went up to 1,031. I remember the price exactly because I followed it like a hawk. And that day, Bear Stearns had to be bailed out by the New York Fed and JP Morgan. And I did have I did trade some gold futures at the time, which I wouldn't do now, but I also had physical. But I decided to close my gold futures position because it had gone up a lot, and I just thought
Very smart.
something something is wrong, and I didn't realize that it was probably the best time to sell it.
Yeah.
But it just feels like right now in the gold market, we're back to 2008. Maybe you could talk a little bit about to the viewers about the premiums that you're seeing in the US, not just in silver, but also gold.
Sure. And before I do that, I'd like to just touch base on your comment to 2008, Mario, because it was the events surrounding 2008 that really, in many ways, shaped the way I look at this industry in the respect that, you don't have to be an economist. You don't have to work in the bond market in London or on Wall Street in the U.S. or even have a degree in economics. Maybe just a Econ 101 in high school or college to understand what I'm about to say. But in 2008, and you mentioned that was the right time to sell your gold, and it was because shortly thereafter, I think it would have been maybe 3 months, something like that, if I remember right. The price of gold went from 1,000 to 700, and silver from 21 to 9. And when you talk about an asset, any investment that would fall by 30%, let's call that asset A, and suspend your imagination for a moment, it doesn't need to be gold. And asset B would be silver falling by 60% from 21 to 9. You would think, with just a rudimentary understanding of economics, that if the price of something is collapsing in a very short period of time, that must mean that there's no demand for said asset when the price is collapsing. If the price is going to the moon, there's got to be a lot of demand. If it's collapsing, there's no demand. No one wants to buy it, right? And we learned this x-axis in Econ 101 that speaks to the inverse relationship between supply and demand. Basic econ. First thing you learn, page 1, supply and demand are inverse of each other. The greater the supply, obviously, the less the demand. The less the supply, the greater the demand. And so when we saw gold and silver fall by 60 and 35% respectively, one would assume that the markets were flooded with gold and silver. And what was very unusual about that time was that the six major mints of the world, this is how they reacted to that event. The US Mint was shut down 8 times in 08 due to demand and the inability to meet it. The Rand Mint in South Africa, for the first time in its history, ran out of product and shut down. The Perth Mint in Australia took no new orders after mid-August. The Canadian Mint and the Austrian Mint were working 3 8-hour shifts a day, 24 hours, and were 12 to 14 weeks backordered. Every refiner on the planet was sold out of product, every single one of them. I would get phone calls from people in Germany, and they would say, listen, our normal supply chains here locally in Germany and with the Swiss refiners is shut down. Is there anything you can do to provide us product? You could even send it. We have accounts at Delaware Depository. Go ahead and send it there. We thought we were going out of business because there was no product. Now, since that day, I have talked about for the past 12 years, past 14 years, God, time flies, that the market would identify itself by no product, because it became very obvious to me that not only was the price being controlled with levered futures contracts driving it down, it also became very clear that everyone looked at this as an incredible buying opportunity. So while the price was driven down, no one sold an ounce. In fact, everyone was begging to find product because you couldn't get anywhere. And I literally thought it might be the end of our business at that point, because we were going months on end. And if it weren't for David Morgan, who came to the rescue of the entire North American industry, he called me up one day. He's been a friend of mine for a very long time. And he said, Andy, I have some friends who work for a company called Pyromet. They've been in the silver recycling business, recycling silver out of the back end of X-ray machines for the past 30 years. And they have a huge stockpile of silver. They made the most ridiculously ugly bars you've ever seen in your life. And they didn't even say silver. They said 100 ounces on it. 100 ounces of what? But that's the only thing that the entire industry had to sell in 2008. So I need people to understand for a moment that what we're seeing now is very similar to what we saw in 2008 in terms of a situation where the price has been bled down. Gold was, at its all-time high in March, coinciding to the day with the London nickel market failure. And silver at that point was at a high point in the past year. And as the price has been driven down over the past several months, the supplies globally have also disappeared. We can start at the very top, whether we're talking about SLV. Well, let's skip SLV for a moment. Let's talk about the London Metals Exchange. Silver at the lowest level of stockpiles in the history of all recorded silver stockpiles. I think they started keeping a record in 2016. It's the lowest level since then. You see gold and silver being bled off of the COMEX, where in one day last week, in one day, 5% of all of the good delivery bars, 5%, were taken delivery of off the exchange. A few months ago, 45% of all the kilo bars, which I think back their mini contracts, 45%, like 25 million ounces taken off the exchange in one day. We have 38 million ounces in the registered category on the COMEX. Now, this is the price setting mechanism of the world. 38 million ounces in the registered category. Those are the bars that can be delivered right now. India took possession of 37 million ounces in August. So 1 month's delivery to a country like India is roughly the same amount of silver backing the price mechanism of the entire globe. The registered category, those bars that has 38 million ounces in it, is the open interest on COMEX in comparison to the amount of silver that could stand for delivery. It's over 1,500% rehypothecated. In other words, there is 1,500% more paper contracts than there are bars in the back. So as people are being lulled to sleep by a price that is doing next to nothing, the biggest money in the world, I'll talk about SLV for a moment, over 120 million ounces have been taken out over the past 6 weeks out of SLV by the registered authorized participants. You're talking massive drawdown off of all of the exchanges. We're seeing record high premiums on the Shanghai Gold Exchange, in Dubai, everywhere, from the very, very top. So let's just get one thing straight. Price is a tool of misdirection. Price is what is being used to misdirect everyone's perception of reality, while the big money siphons quietly when nobody's looking. They siphon the physical supply. Now, how does that translate? Well, if you remember Ronald Reagan and his trickle-down economics, let's use the trickle-down supply theory. The very, very top where all the big bars come from, those bars are what are turned into planchets or rounds, which are then stamped into coins by the sovereign mints. Well, if you have the lowest supply ever in COMEX nearly, and for sure in the London Metals Exchange, what happens to the availability of coins? Well, if we look at the sovereign mints around the world, getting supply is next to impossible. It is all of a sudden, for the first time, other than in 08 when it just all disappeared at once. In the 33 years I've done this, I've never seen anything like it. You have premiums going to the moon. You have product disappearing, literally. And I received something from my operations that I just want to share with you. They were talking to me about how hard it is to get bars from the refineries around the world. And this is from someone in my operations. And he said, here's what we're seeing right now, Andy. He says, Umicore, one of the largest precious metals recycling businesses, over capacity and won't take new accounts, yet they've been trying to get us on board for years. Asahi, who bought Johnson Matthey, they won't take any new customers because they can't fulfill current demands. Metalor, who's wanted our business forever, now can't accept any new accounts. The Geiger Mint in Germany, no more capacity. He said the mints and refineries that we buy from in Turkey are having political issues where it's getting very difficult to get metal out of the country. And they said we better just not count on things from the Turkish side of the table for a while. IGR and I forgot the other, Nadir, that's the other one. So having problems there. PAMP and Valcambi, both of them are really not releasing anything till January. And they said to us, both of them are very concerned about energy. Can they keep the lights on this winter? So they're not sure about what future allocations will look like. This is what we are seeing, Mario, at a period of time when the price is coming down. So I submit to people out there, if price is such a big deal, if this is a barbaric relic of the past where it can't even stand on its own 2 feet in the midst of 40-year high inflation and in the midst of chaos globally, from geopolitical chaos to political chaos to war in the Ukraine, all of these things that are happening, then who the hell's taking all the metal? Why is it disappearing from the very top? Who would be the most sophisticated, well-funded, well-informed traders on the globe, closest to the information spigot, closest to the money spigot? They're bleeding dry all of the exchanges from Shanghai to London to the US to the backdooring out of the ETFs to draining the global supply of retail product. It's the real deal. It's the no-look pass in basketball. It is misdirection to the nth degree. Misdirection through price. It is the greatest tool of misdirection because no one lifts up the hood and looks underneath. They just look at the pretty paint job. They're not looking at what's inside. And that's what is driving this, in that they are using price to bleed dry all of the physical supply from the very top down to the retail level. And I'm curious to see if you're seeing the exact same thing in the UK with super high premiums.
Yeah, and before I go into that, just wanted to reiterate that in 08, I didn't sell my physical gold and silver. I sold my futures positions. And I think I did that because I had a feeling if Bear Stearns had almost collapsed, what was going to be the next bank that was going to collapse. And I was more concerned about counterparty risk. I think that's why I sold it deep down. But In terms of the UK, yeah, we're seeing quite high premiums. And yesterday, I spoke about this in my video this morning. I got an email last night from Atkinson's. They're one of the biggest bullion dealers in the UK, and they said we're paying, sell us your gold, and they said we're paying 2% over spot, which seems seems little, but in the UK, the dealers hardly ever pay spot. And for them to come and say that they want to pay 2% over spot for sovereigns and 1 ounce coins, I was surprised. And you look at all a lot of the main dealers' websites, excuse me, and you look a lot of the at the main dealers' websites, they're all saying due to high demand, we have a 3 to 5 day delay in fulfilling your order. And the other thing that I saw last week, there's a story in the FT. FT is very anti-gold. They don't like gold, but they actually had to come out and say the Royal Mint had its best month in September, its best month in 1100 years. That's how old the Royal Mint is, and they made record profits selling gold and silver coins. So yes, it's really weird like you said in the beginning, that basic equation about supply and demand doesn't work for the paper price of gold and silver, because the bullion banks and also speculators, they've got plenty of paper to sell. They don't care about having gold as insurance, so they just want to make fiat dollar profits, and that's what's kept things as they are. But I think once the Fed or the Treasury show signs of capitulation, and I think we're close to it, we could see gold turn around very quickly, like it did, from the low at around 700 all the way, and then it went to like almost 1920 in 2011. We could see a kind of move like that in gold and silver as well.
Yeah, I think the bond traders certainly believe that that's going to happen with the inverted yield curve. That we'll see a pivot similar to what we just saw in the UK to come in. And I mean, the pension problems here are no different than they are there. And the insurance companies who are heavily invested in stocks and bonds, as rates rise, you meet that problem. You talk about the Fed, who I believe, I want to say, just for the last year paid over $15 trillion in bond payments. They paid out. How the hell do they do that, right? How the hell do they pay out $15 trillion in bond payments? Well, they do that by issuing more bonds. In other words, it's like paying off your MasterCard with the new Visa card. And the interesting thing about that is that Janet Yellen says, well, hey, I don't want to issue too much in the way of long maturities. We want to do shorter maturities, like 2 and 5 and 10 year. Well, the interesting thing is, if you go back 2 years ago, almost to the day, the interest on being paid on a 2-year treasury was 0.012% or something just like that. And now it's over 4%. So the cost of doing that transition, of funding all of this debt, becomes more and more and more and more. And the higher you raise rates, the more onerous this becomes, the more pressure this puts on our markets. At some point, they have to capitulate. Now, does capitulate and pivoting mean going just to 25 basis point hike instead of 75? I think it does. Because they're pussyfooting around anyway. Paul Volcker raised rates to 19.75% with 16% inflation. That's getting tough. That's doing something, but that will blow up the economy. That will blow things up to the nth degree. Do they want to do that? Probably not. So, yeah, I think that ultimately, when you look at things that way, it's either the greatest depression ever or it is hyperinflation. And when you talk about, you mentioned counterparty risk. Well, what is gold and silver? They are assets that are not simultaneously someone else's liability. There is no counterparty risk. So in a depression, in a massive deflation depression, everyone talks about gold and silver, well, gold in particular, being an inflation hedge. And sure, okay, but in a deflation, when no one trusts anyone and everything is counterparty risk, gold is is immutable. It has no counterparty risk. So it actually performs best in that scenario. We know what happens when all governments have chosen inflation over austerity, and we know what gold and silver can offer you in that environment. So whether it's inflation, whether it's deflation, you need to own precious metals, not as an investment, but as wealth that has outlived 2 world wars, outlived German hyperinflation, outlived the Great Depression, outlived every pandemic, and is still immutable. And that is the way that I look at it. And I have much more faith and optimism that we are right based upon the movements of the biggest money in the world, whose actions are betraying the rhetoric, whose actions of massive accumulation and drawdowns from the world's exchanges tells a story differently than the price, whose demand in this retail market, which is to a point where everyone who sells precious metals in my shoes as a precious metals company in North America, and obviously here now in the UK, would have an easier time getting clients than they would be getting product. That's a great problem to have if there's product, but the fact that the product is getting hard is it's very disheartening. That you know, I've done this for 33 years. I got strong fingertips. I've been able to hang on through it all, and we're here. And now getting product is our single biggest challenge. You know, you mentioned the UK having their best month. They're the only mint, to my knowledge, that has already released 2023 coins, and they're called the 2023 Queen Elizabeth version. I think that's going to be followed by the King coins very soon, but they're the only ones who have sent out 2023s, and that's probably why they've had such a big month too. Everyone wanted the 2022s with the Queen on it as a collector's item or whatever it may be. But I guess the moral of the story is that it doesn't matter what the story is that is making people buy precious metals. It's becoming very, very difficult to get. And I think, again, if I could leave people with one thought after listening to this whole conversation, it is that the actions by the most sophisticated, well-funded, big money in the world is betraying the price and the rhetoric that the Financial Times or that the ticker tape is saying. Same thing that happened in 2008. And I think that when the music stops, gold and silver will be what they've always been, and that is wealth. Not an investment, but wealth. And if you own enough, you'll be wealthy. But you need to own some to get out of the way of what is coming. Because, you know, these governments, just like the UK, the Bank of England, they're trapped. If they let rates rise and everything blows up, the pensions in the UK were just about to blow up. Okay, same thing's going to happen here. And if you choose to go the other direction, you lose all credibility and you go down the hyperinflationary path. This is what happens when you manipulate interest rates for too long of a period of time. You create distortions, you create misallocations, and the bar tab needs to be paid, and it will be paid. And it's just a matter of how it all plays out, Mario. And so I think that's why you own metals right now more than anything.
Why do you think the U.S. Mint is not stepping up to the plate and minting gold and silver coins? Why is it the Royal Mint here in the UK that's like doing things? It's weird.
Well, there's an answer that I can give you, and I don't know how credible it is anymore, but here's what the popular narrative is. First of all, I'll tell you this. For nearly 15 years, I've been one of the 27 authorized resellers of the U.S. Mint. It is an honor in many ways that shapes and defines my career. It's the cherry on top of my career sundae. It's something that I'm very proud of, very, very proud of. Worked very hard to get it, and they don't hand them out. There's only 27 since 1986. You have to be nominated by one of the 5 or 6 primary distributors. So while I'm very proud of the United States Mint, they have been horribly inefficient and frustrating since really March of 2020. The reason that people say, and I don't know how accurate it is, but evidently other countries don't impose the same restrictions that the U.S. Mint does, which is that the Mint or the Treasury Department is not allowed to go out into the open market and pay more than what the average spot price is globally. In other words, the UK Mint, if they need to pay $2 over spot to get the 1,000-ounce bars, so be it. The Rand Mint, so be it. The Austrian Mint, so be it. The Australian Mint, so be it. the U.S. can't do it. And so what's very interesting to me when we talk, and you could put your tinfoil hat on and think, are they trying to stockpile for what's coming next? Do they want to limit the escape out of the exodus out of the dollar, and what that would imply? Because over the last couple of years, Mario, we've had record years going back to 2020, 2021, and we're well on pace to even better 2021 here. Now, if I encapsulated those 2.5 years or 2 3/4 years into one statement, it would be silver. Silver. Everyone's been buying silver. 95% of all of our sales for 2.5 years, silver. Yet in July, the U.S. Mint called me as one of their resellers and said, oh, by the way, Andy, we are limiting production of all gold into the second half of 2022 by 50%. Now, my thought was, why the hell would you do that? No one's been buying it. My cost on gold eagles right now is at least 10% over the price of gold. I'm buying them back for 7 or 8% over the price of gold. So when you talk about the UK distributors paying 2 or 3, I'm paying 3 times that right now for gold eagles. This is insanity. At $16 over the price of silver, I'll be the least expensive in the country. I'll pay people 13, 14 bucks, whatever it is, over the price of silver to buy silver eagles. I've never seen anything like it, but I'll tell you one thing. If you would have bought silver eagles from me the day before Thanksgiving in 2019, the end of November, you would have paid $329 over. I would have bought them back for $265 over. You call me back 4 months later in the midst of COVID, and I would have paid you $11 over and sold them to you for 13 or 14. The spread is widened as the premium is widened. But now it's even higher, and they've never come back down, ever. And the mint has never been less efficient than they are now. The one thing that's different now than over the last 3 years is they're now doing it with gold too, where gold over the last 2 years has just languished. No one's been buying it. Premiums were low, and now bang, all of a sudden gold is trading from the U.S. Mint products at the highest I've ever seen it in 33 years. So they're the model of inefficiency. Whatever conspiracy theory people want to put on it, there's a fine line between conspiracy and reality. And Occam's razor would tell you maybe it's right, whoever comes up with the most logical conclusion. But whether it be to hoard for the U.S. government or mitigate the exodus out of the dollar, whatever the answer is, it's the only branch of the government that actually makes money. And it's the part of the government that they should, if they really cared about the people in this country, they would be doing everything they could to get people's hands on a little bit of gold and silver. Instead, they're making it next to impossible, where we have to run a special this week on the 2023 Queen Elizabeth version of the gold and silver Britannia. That's our special this week. It should be the silver eagle. It should be the gold buffalo or gold eagle. No, I haven't recommended them in almost 3 years because they're so damn expensive.
So before we wrap up, could you tell the viewers what kind of deals you've got? Because we've got also our affiliation now with you, which is Billy. So if you want to get in touch with Miles Franklin, quote Billy, who's the dog, of course. He's not here right now.
Yeah, so if your listeners, I've talked to the whole world about our new website that was supposed to be launched a month ago. It has been nothing but a series of disappointments and setbacks. We're very close, but it isn't ready yet. So in the meantime, send us an email at info@Miles Franklin. Request prices. Put Billy or Maneko64 sent me or Mario sent me. For sure, Billy, but in the subject line so that we can figure out where these leads come from and certainly credit you with that. But we'll make sure that your listeners are getting personalized service and as good of a price as they'll find anywhere in North America. Right now, as I mentioned, we do have the 2023 Queen Elizabeth Silver Britannias, and I almost choke over saying it, $7.50 over the price of silver. That's a special. Mario, that's almost 3 times higher than I ever sold them for from 2020 back. 2020 on, it's just a new world. You go back from Thanksgiving 2019 back for 33 years, those were never more than $2.50 over, ever. Now they're 7.5 over, and that will be the least expensive in the country. And they'll be gone in a day or two. 65,000 of them, like that. Wow. We also have the gold Britannia 2023 Queen Elizabeth version that is $85 over. But if you're interested, send us an email, info@Miles Franklin. Put Billy and Mario or Maneko, whatever it is that makes us know that it came from you. And we will make sure not only that it's a good experience, we'll answer questions, and we'll do our very best to make this a one-stop shop for anything you ever decide to do in the future with precious metals. And I'll make sure it's a good experience.
Just before we finish, again, just another question. What about the what's called the constitutional 1964 and before silver? Is the premium on that really high? Do you deal in those coins too?
Yeah, we used to call it junk silver. My whole career it was called junk silver because junk referred to the fact that it had no premium above its melt value. In fact, long time ago, 20 years ago, I would buy it for 10 or 15 cents back of its melt value because no one wanted it. And I'd sell to the public for 10 or 15 cents over. Very, very small, thinly profited, no one wanted it, right? Well, now everybody wants it. And it's become as rare as hen's teeth. And the premium on it is the highest of anything we sell, with the exception of Silver Eagles, probably about $11 over, somewhere in that neighborhood. And the reason people want it is because if you take a 1 ounce Britannia or a 1 ounce Silver Eagle versus 14 silver dimes, 14 silver dimes, that's it, is almost exactly 1 ounce of pure silver. So in theory, if things got really horrible, and a lot of people believe it will, 14 dimes would represent 14 transactions. 1 Silver Eagle or 1 Silver Britannia would represent 1. How do you make change? So the way that you figure that out for people who are interested, if you had $1,000 face value of dimes, quarters, or half dollars, if it were uncirculated, never been circulated, it'd be about 723 ounces of pure silver per $1,000 face value. Any way you can make it, a mix of, if you had a swimming pool filled with dimes, quarters, and half dollars, scoop up a bucket and equals 1,000 of them, all of them together, you have 723 ounces by weight. The industry uses 715 ounces now because the theory is for 60 plus years of being run through coin counters and whatnot, the silver wears off. So if you had 10,000 dimes, which is a $1,000 face value bag, and you take 10,000 and you divide it by 715, that's going to tell you how much silver is in a dime, 0.000715. 14 of them would be almost exactly 1 ounce of pure silver. So it gives you the utility and the flexibility to barter with, to make trades. And it used to be a hell of a deal. For really pretty much the first time in my career, you're able to buy premium coins like the Britannia at $7.50, which is ridiculously high, but it's still $4 under what you can buy pre-65 constitutional silver. It's certainly a shedded junk tag, and it's anything but that right now. What it is the most versatile form of silver you can own here in the States. So yeah, we have it, but it's here again, there are better values if you can find them. I think junk silver is great. Maybe buy a little bit, but it's not very economical right now.
Yeah, I even have some US junk silver. I started buying it like over 10 years ago. I have half dollars, dimes, and quarters. They're great coins. And I also have in the UK pre 1920, our coins were 925 silver. So I've got those too, and I think it's a great thing to have. Like in the UK, I think the sixpence they call it. It's like the old like the dime. So if you have a lot of those as well, I think they could come in handy if we need to barter. So Andy, thank you very much for coming on the channel. I always enjoy speaking with you, and we'll keep in touch.
I hope you and I get to tee it up together, Mario, play around the golf, and sit over a couple of pints and talk about the world. I can't think of anything I'd rather do. And whether it be over on the other side of the pond or over here in Florida, we need to make that happen. In the meantime, I enjoyed being here too. Thank you for the invite. I look forward to picking up where we left off. And to you and everyone else out there, hope you all stay well.
You're welcome, Andy, and I hope you stay well and safe too.